$1,000 for XRP. Possible. That's what Claver says. He's one of the most influential XRP voices in the world, and today I get to talk to him. It's a real honor for me. His thesis: Ripple is becoming more and more important in the new financial world. US regulation is finally shifting in favor of crypto with the Clarity Act. Stablecoins like RLUSD are going live. Tokenization is exploding, and right in the middle of it all, XRP, like a row of dominoes, just waiting for the first one to fall. If you enjoyed this video, show me with a like, subscribe to the channel, and now enjoy the interview. Thank you so much. Hey Jake, thank you so much for being here. It's a real pleasure.
Absolutely. Thank you for having me.
Yeah, let's jump into the first question. It's about XRP. We're talking about the path to $1,000 XRP, and you said in one of your last videos that $1,000 for XRP is quite possible. Can you walk us through your theory with the dominoes? What's the first domino, the second, and so on, and how does these dominoes lead to $1,000 for XRP?
Yeah, so I know that seems like a high price point for a lot of people. You know, they look at the total market cap and they look at the total supply and the tokenomics around it. And in most circumstances, that wouldn't be feasible, just candidly. That situation is a perfect storm that I do think will play out. I think at this point, it's very likely that it will play out, actually. So what does that look like? Well, I kind of have to take it back to macroeconomics. A lot of people focus narrowly on the crypto space, and they think that this is retail driven. I would challenge that and say that a lot of the volume that we've seen move into crypto over the last really two years has been institutionally driven with the ETFs and some of the other structured products that they finally passed and created for this. And so, and fundamentals are at an all-time high. We know that they're going to implement these networks and protocols at scale globally. And so, you know, just challenging the paradigm of market cap to start with, what would be the total market cap of email, right? Like it doesn't even compute. It doesn't make sense because it's a global network that allows people to send data between, you know, different counterparties real time. And so that's how I think about these digital assets. And there's, you know, multiple layers of the internet that allow people to do that. And you don't quantify that in a market cap. You could quantify it in the volume of data that was moving through that layer at any given time and the throughput that it's able to achieve or sustain. So with the domino theory, I think that the reverse carry trade will unwind. And we started to see that in August of 2024. And for those that don't know what that is, over the last 20, 25 years, a lot of people have borrowed a lot of money from the Bank of Japan because it was very cheap to do so. Sometimes even negative interest rates there in Japan. So, you know, basically free money that you could then borrow from the Bank of Japan. And then they didn't make it where you had to keep that in their economy. You could take it other places. So most people have taken that and parked it in treasuries or, you know, other stock markets, global real estate, gold and silver, you name it. It's tens of trillions of dollars that have been borrowed from the Bank of Japan and then put to work in different markets globally. And so August of 2024, we started to see that unwind, basically a global credit call where people had to exit those positions, swap it back to whatever currency they needed, then, you know, change that back to yen to be able to repay the loan in kind, because that's the Bank of Japan. They're only going to accept yen, right? So there's kind of a double whammy there. When you exit your position, if that's falling, you've lost gains. And then you have the exchange rate. So if the yen is strengthening against whatever currency you're having to sell into, you're also losing money there. And so there's this tightrope that people are walking at this point where we're at with the bond yields in Japan have, you know, they've risen substantially even since that point. The Bank of Japan raised to 75 basis points and they've held there. And they really need to be about 1.5% or 150 basis points on their interest rate in order to continue to meet, you know, where they need to be able to pay out the returns on the bonds and everything else they have. But they're also in a position where they'll collapse global markets if they raise interest rates because they know so much has been lent out. And you've seen the Fed also do this. Jerome, you know, recently just finally left his position there at the Fed. And we have Michael Warsh, who's been sworn in. And the Fed also held interest rates, and they lowered a little bit, but it wasn't enough to caused the U.S. Treasuries to fall to a point where it made sense for people to swap out of U.S. Treasuries and start holding the Japanese bonds. So that's what's going to happen. Interest rates in Japan will go up. Our interest rates are likely to come down now that Warsh is in that seat. And you will see a rotation out of U.S. Treasuries into Japanese bonds. So when those get sold onto the market, you have to have demand for that. Otherwise, rates continue to climb, and then we're in trouble here in the U.S. And in 2024, they didn't have the stablecoin bill passed, but they did in 2025 after I had released that theory. And that drives demand domestically here in the U.S. for those treasuries as they flow back onto the market. So you might think, okay, well, what does this have to do with XRP, right? Like this is global macroeconomics, things completely outside of the constraints of crypto. Well, crypto has a big role to play here, and it is the liquidity and movement to real-time settlement for the back end of the stock market and the FX market, because both of those things are going to be affected when all of this plays out. If there's not enough liquidity or credit that can be extended to these parties, we will literally have an ICE 9 scenario. Jim Rickards has talked about this. ICE 9 is like an isotope that freezes all the water on the planet, right? That's effectively what would happen to the monetary system when this unfolds at scale, because all of that liquidity will be sucked back one direction. And you can imagine tens of trillions of dollars being sucked out of markets globally. And it's not really going to matter where you have your money. It could be in bonds. It can be in the stock market. It can be in gold and silver. I believe it's going to be a complete repricing for
a complete crash across every asset class.
Well, and it's not even necessarily a crash, too. I think it'll be, when I say a repricing, I think that they're also going to have to shore up currencies. We're already seeing movement toward that. Russia has already backed their currency with gold. You're seeing other, global central banks stockpile gold. Oil, I think, could also be used. And I think, if XRP gets its day in the sun, it could also be in a position where it could become a tier one asset. So I think that they will peg gold and oil in a certain ratio, and that'll provide stability. And then each country can, issue their currency backed by those commodities in some relation or form. And that's what will allow them to be able to sustain or maintain the value of the currencies globally without them collapsing into a problem like a lot of people think that is going to happen with fiat. They're going to have to go back to it. Peter Schiff has been talking about this for a long time. Mike Maloney, many of the other gold bugs out there understand. But it's definitely going to whipsaw markets. And I do think that, if you're not positioned well, you could lose a substantial amount of the wealth that's been created from, the inflation that we've seen pumped into the economy. So as that plays out, I think Tether is going to have some issues for either the war that's going on there in Iran, or, being sanctioned because of issues with that, or there's a destabilization of Tether because they don't have the full backing of their balance sheet with U.S. Treasuries. They hold, they're like the 16th
It's because of the strong connection to the treasuries.
They do. They have a significant position, but a large portion of their balance sheet is Bitcoin and other assets. They've never had a full audit. And why would you launch a U.S. compliant stablecoin if you intended to make the other stablecoin that you have compliant over the 3-year period that you have to do that? So just a lot of question marks there for me, but I think that's going to cause some liquidity issues on the exchanges. I think that it will have impacts for Bitcoin. And then you've got, huge unrealized losses on the Bitcoin for the investment banks and other people that have issued these ETFs. If they're not able to settle those real time, Bitcoin settles almost real time, 30 to 45 minutes to be able to settle a transaction. The stock market's T+1 still. So if they haven't moved to T+0, they're going to be in a bad spot. I think that you're going to see an onslaught of XRP ETFs and a huge rotation of liquidity into that asset. There's not a whole lot left on exchanges at this point. It's very low liquidity for XRP on exchanges. And that would drive the price substantially higher, where they could then start using it to, settle the back end of the stock market, de-risk the currency market. It solves a lot of the problems that are going to occur when this unwind happens. And,
so is this maybe one advantage if you compare this to Bitcoin, because there's much less liquidity on the exchanges like Bitcoin?
I'd have to look at Bitcoin's liquidity on the exchanges. I mean, we've seen some other interesting things come out with Bitcoin. You've got some old wallets moving Bitcoin around, selling Bitcoin. You've got somebody just burnt 107 Bitcoin the other day. Much of the Bitcoin has been lost over time. And now that between the ETFs and Michael Saylor and a few other counterparties, a large portion of that supply is held. If Saylor's impacted by this and Bitcoin's price drops low enough, he may also be in a position where he starts to have to liquidate Bitcoin. It would have to be a very low price for that. It's far below, what a lot of people think. But if we do see a significant downturn in the asset, there may come a point where, he has too much leverage and would have to start doing that. And that would cause additional sell pressure because he is one of the largest holders, or MicroStrategy is, not him specifically. So that's the theory. Again, it's a theory. It's not perfect science. The war with Iran, I called that a while back just because without that, there's not going to be the pressure for Japan to raise interest rates without energy causing them significant inflation in their economy. They could continue to kick the can for a while, but this being in place and them having an energy crisis, they derive the majority of their oil imports from the Middle East. And so with that being dried up, the cost of energy there in their economy is substantially higher. The ability to ship goods or produce goods goes way up. And so as the central bank they should have to raise interest rates, strengthen the currency in order to be able to offset that inflation. So I do think that they're going to do that. And I do think that this is going to unfold in the not too distant future. And I do think that it's going to have, a really good impact on certain digital assets.
So you just said it's a theory. So are there also limitations or pitfalls, or do you also prepare for other scenarios, which could be quite normal, at least from your perspective as an entrepreneur?
Yeah, I mean, so I'm pretty confident in this one, but there are certain circumstances where there could be something else that could be used or an amalgamation of other assets that might also appreciate. If we had full clarity here in the U.S., then there could be other assets outside of XRP that could be used in this circumstance. I do think that there will be other networks that facilitate value transfer. You got Solana, HBAR, XLM, or Stellar. You saw the announcement yesterday from them with the DTCC.
Oh, with the DCC, yes, yeah. Great announcement.
So there's a lot of things that could also facilitate value transfer. There's some gaps there on the amendments that have been implemented on those networks to be able to facilitate things inside of the architecture and compliance that's required by financial institutions. Digital identity, credentials, permission domains, permission DEX on the XRPL. Already has oracles integrated, the AMM function. You have Sora-band smart contracts on XLM, and I think that that's what's going to be great for tokenization of stocks. But as far as back-end settlement goes, you could also facilitate issuance of stocks on the XRPL with the multipurpose token. It allows for the issuance of shares and different voting rights depending on which share class you held, but it's exchangeable. It's a fungible token. And so, there's just a lot of things that have been built into the XRPL over time that I think give it a strategic advantage alongside the lawsuit and the clarity that they have from that lawsuit with the SEC here domestically in the U.S. And now, we have joint guidance from the SEC and the CFTC that the majority of these assets, or at least the 16 they've designated as commodities, that they are not securities. So a lot of people think we need clarity for these networks or protocols to be implemented at scale. I think the last thing that we're waiting on that side is just the OCC's oversight for the banks to be able to issue stablecoins, because again, with the significant amount of treasuries that's going to flow back here, we need the banks ready and willing to take up those treasuries to stabilize the bond market. So I think that, either way it could go, but I'm confident that we'll see price appreciation in this unwind prior to the Clarity Act being passed.
Is the Clarity Act dependent on the OCC, or is the OCC theme Ripple is waiting for the OCC license at the end dependent on the Clarity Act?
No, so there's a couple things in the Clarity Act. It would push it where any court cases that have decided clarity around digital assets could not be overturned. So that would be a huge win for Ripple. But separate of that, so we have governing bodies here in the US that are regulators. So the CFTC, FINRA, the SEC, the OCC. The OCC is the regulator for banks. Their job is to interpret the laws and enforce the laws that Congress writes. But they themselves can issue guidance around things. So the Clarity Act, and now that the OCC actually is just giving guidance on the Genius Act, which was passed last year. It has the only piece of the Clarity Act that it is really kind of clarifying is yield on stablecoins, and that's been a big piece of contention between the banks and other parties that are looking to vie for that position. Fintechs and neobanks and a few others are looking to move into this space and take market share, and the banks or the incumbents don't want them to do that. So if they're willing to pay a higher yield on stablecoins or tokenized deposits, the banks want to try to force that out. I think that's been some of the issue. But if the OCC comes out and says, "Hey, this is how it is," then there's really no back and forth anymore. That you don't need that in the Clarity Act. So their comment period ended May 1st, and they have until July 18th to release that guidance. So anytime between now and then, we could see them come out and give clarity around what stablecoins should look like if banks issue them.
How important is the Clarity Act really for the XRP price, or is it just important for example, RLUSD?
So the Genius Act would give RLUSD what it needs, and the OCC. So the Clarity Act is really kind of more focused on clarity around what these digital assets are, allowing, I think it's kind of like retail confidence also to be able to come into the space. Depending on what your licenses are, you already have, clarity around certain things. The other piece that's in there that I do think we need is regulations around DeFi here domestically in the US.
Yeah, same here in Europe.
Yeah, it's cumbersome, right? And there's a lot of things that should operate a certain way that they're taxed separately. Like if you mint a token on another network or wrap it, that's a taxable event here in the US right now, which I think is silly because it's just the same form of value being mirrored somewhere else, right? It's not like you sold it, but you are exchanging it for another token on another network. So as that's defined today, that would be a taxable event. So I think they'll clear some of those things up with the Clarity Act around taxation and transfer, oversight on liquidity pools and DeFi protocols. You just want accountability and some compliance and KYC and AML rules built into that so that there's not bad actors, people can't be malicious or, defraud people, which we've seen a lot of in crypto, unfortunately. And there's also exploits around smart contracts. The insurance companies charge you a lot of money to insure smart contracts or custody or a lot of the things around crypto because, one, they may not understand all the risks. And so they just score it higher and they say, hey, you have to pay more. But there's also not as many players in the space to be able to diversify that risk across. So I think that that'll also help the insurance cost, depending on what you're doing with crypto. And that's going to happen, I think, post clarity, right? When there is regulation around DeFi, I think that's when we're going to see, a lot of people move into the space. And I'm hopeful for that. I'm an advocate for both the Genius Act and the Clarity Act. I was on Capitol Hill last summer when they passed the Genius Act, talking with congressmen and women, explaining this to them so that they could vote and make sure that it got through. And that's also why I thought, clarity would be pushed to 2026, because that's literally what they told me to my face when I was on Capitol Hill. People didn't like to hear that last year, but here we are. And now I'm telling people, I think it could get pushed out even further. There's just a lot of other priorities in Congress in the short term. And unless there is a catalyst or an event that causes that to be the new priority, they're going to take their sweet time, and that may take till past midterms. And I think that may be the Democrat strategy also, is kind of not filibuster it, but push it out to the point where they can take control of a portion of Congress or all of Congress, and then keep it from passing. So political games being played, there's a lot of different parties at the table with different interests. But I do think, with the regulators coming out, and if we see the OCC's oversight, we'll see the implementation of this. And really at that point, it becomes very difficult for anybody to undermine it or overturn it or take it back.
You have said that the hacks and exploits for DeFi is surging. I think one of the reasons is also AI. AI is making it more simpler and cheaper for a hacker to find some weakness in the protocols. So next question for you is the topic AI. Where is the narrative affecting the XRP ledger or Ripple? I don't really captured it until now as a retailer. So in what way do you think AI will still also influence XRP? Why?
I don't know that it'll exploit XRP, a network specifically. They've done a lot of work. So the XRPL has only ever been down. Well, it's never been down. It's been paused twice because of the throughput on the network. It was a little bit more than it could handle at the time. But there's never been an exploit directly on chain. The XRPL is also, the smart contracts that are built in are native to the L1. There's no L2s. That's where you've seen a lot of the exploits happen, are L2s on networks where additional assets have been minted in some capacity.
Wrappings.
And then, say it again.
Bridgings. Wrappings, wrapped assets.
Wrapped assets.
We talked about it, and bridges.
And there are trust lines and payment channels and a few other things on the XRPL that are endpoints or trusted parties that are interacting between wallet addresses or separate infrastructure. So, it's not to say that it couldn't get exploited, and maybe it also hasn't been as lucrative to exploit anything on the XRPL because the price has been lower. Whereas some of these other assets have seen significant appreciation, and it's, you don't have to exploit as many wallets or as many vaults or whatever else they're going after to be able to obtain a significant return on that exploit. I think that David Schwartz and many of the others that designed the XRPL had a lot of forethought in what they put together. And if there will be exploits, I think that it'll be, wrapped XRP on something else. We've seen some stuff with Solana. They've got wrapped XRP on their network. And again, not calling out any names, I'm just giving examples. And I also don't think that, I think Solana's done very well and that they've shored up a lot of things. But there's still DeFi risk, right? Mm-hmm. So, the exploit of Aave, where they minted other tokens and then posted those as collateral and then took the wrapped ETH and ran off with it. There's just a lot of ways that people are getting creative, like you said, with AI to be able to do these things. And now that you can use AI to see the vulnerabilities or look at, if you have to be pretty creative, like some of these guys are actually really intelligent to be able to orchestrate the things that they've done. I'm sure that the NSA and other banks and institutions will probably pick them up. And similar to, like some of the other tech giants early on, they'll say, hey, look, like you can do jail time, or you can show us, how to do this and where you would exploit this and how we can strengthen things to make sure that we don't have these losses in the future. So, I mean, and then you have the agentic economy, right? So agents can't spin up a bank account, but they can spin up a crypto wallet.
Yeah.
And to be able to transact 24/7, 365, that's what agents need to be able to do. They don't sleep. They don't get sick. If they need to be able to send a payment or transaction to be able to facilitate whatever they're coded to do, that's what they're going to do. So I think crypto fits really well with AI in a lot of different ways, but it's also going to accelerate at a pace where it's going to be very difficult for the majority of the human population to keep up or understand what actually is going on. And if you're not paying attention to both, I think you're doing yourself a disservice, and you're probably going to be behind the 8 ball in not too distant future if you aren't already.
So in this case, XRP Ledger could be also settlement layer for the agents for the trades.
Ripple just recently made an investment in T54. T54 is like identity for agents, so you're able to see if somebody's participating in a malicious way, and you know what their identity is, and you're able to block them out of the ecosystem. You can blacklist wallets. You can't freeze XRP. You can't claw it back. Issued assets you can. It's built into the smart contracts, but XRP itself cannot be frozen or clawed back. And so, if they're spinning up XRP wallets and you don't want them to be able to interact with your wallet, you can blacklist those. And I'm sure that there will be a lot of wallets, so for the long term, that are blacklisted. But you need accountability and transparency, and that's what blockchain does really well. And I think that they need to implement that with these AI agents early in order to be able to make sure they're meeting KYC, AML. You also know who's behind the agents, right? You have to list the beneficiary, kind of like a corporation, so that can be provided if it's needed. Zero knowledge proof is another big deal, right? You want to be able to transact privately, but the counterparty that needs to understand who they're participating with, you want to be able to see their credentials and all of those things that you need, especially as a financial institution, to be able to hold that on file for whatever period of duration that's required by law. So that's there's a ton of ways that AI is going to be hugely beneficial for crypto, but there's also like you mentioned, ways that it could be used maliciously to exploit things. And I think that they're going to have to shore some of that up before we can really, get to market at scale and not have significant losses.
And it's also more invisible for the people which using just apps or something like it. And that's maybe also the reason why AI models have more attention, like AI infrastructure for maybe the XRP Ledger. Yeah. Let's say DeFi is working more and more. We have clarity with the Clarity Act, and which leads me to the next question. You have made a video. It's just called "Live Off Your Assets," and in that video you explained how to live off your XRP without ever selling it. How does this work in practice in the USA? Maybe I guess DeFi is taking one part of it, and would this also be possible for a private investor in Germany?
Yeah, you absolutely could do it in Germany. So we work with a lot of people internationally. If you have a corporation or you're an individual and you want to work with us, we are an SEC registered wealth advisor. We hold the assets in institutional custody. We help our clients navigate this space and make sure that their stuff is safe and they understand the risks in what they're participating in. It's still their discretion whether they want to participate in a high risk thing. We just make sure that they understand, what all they need to be looking at. But the reality of the situation is, we've spun up a hedge fund. We've been able to pay out some returns to our investors over there, create some cash flow off of their assets using traditional means. It's cumbersome, it's clunky. I would love it to be on chain and be in DeFi, and I think that it will be over time. And then, borrowing against your assets, that's kind of like one of the age-old things that works in every jurisdiction to be able to access liquidity without any tax implications. Some people move to, very favorable tax jurisdictions, and they're not as necessarily worried about selling the asset. But if you do a cost to benefit analysis and understand that there's going to continue to be appreciation on whatever the asset is, why would you sell it? Right? It'd be, if it's going to appreciate 10% this year and you could borrow against it at 7, selling it means you lose the 10. Now you don't have to pay the 7, but that's a 3% arbitrage. And if you think it's going to appreciate more than that, then you would still continue to hold on to it. And I think that there'll be a lot of different ways, especially when I'm right about the BIS regulating XRP as a tier 1 asset. the interest rate you're going to be able to borrow against it at is going to be very, very low. The LTV is going to be very, very high. And you'll be able to access that liquidity and then take it and do, the hurdle rate that you're going to have to meet can be very low. You can put it to work in treasuries or other assets and be able to generate some cash flow for yourself without ever losing, visibility or control of the asset. So pseudo accounts are going to be big, where you're able to reflect the value or mirror that value out of your account without moving the asset into somebody else's infrastructure or holding it with a different counterparty that you might not completely understand how it works, or you might not have all the trust with. But yeah, I mean, I don't think people even think about this stuff. They just buy crypto and they wait for it to go up.
Just hold it.
And then it goes up and they have huge tax implications. And then they're like, oh no, this worked. How do I not have to pay a ton of taxes on this to be able to get my money out of it? So that's what that video is about. If people want to go check it out, it's there on the channel, and there's multiple different ways to be able to structure that.
Yeah, please subscribe, Jake, if you don't know him until now. The actual situation is that we're currently in a bear market, Jake, and many people are sitting on all coins in the red, which is frustrating. And they want to invest, but there's no liquidity anymore. We have to save our capital at the moment. What can you give us in this situation, also with a view into the next years? Last question for you.
Yeah, I mean, so crypto's been cyclical. This isn't any different than the past. I would say this market is different. Like I mentioned earlier, there's institutional players, and they have a lot of money to be able to manipulate things the way that they want them to be. So I know that's frustrating for retail. I would argue that the 2020, 2021 market was much more retail driven, and all the cycles previous to that. This last one's been a bit more institutional. And I think on a go forward basis, that's going to be the case as well. So, if you're going off 4-year cycles with Bitcoin, the midterms have always been kind of the low point in that cycle. And then we get to the halving, and then beyond the halving, we see significant upside in Bitcoin because the amount that's being put onto the market is less. So there's a restriction in supply, demand remains equal or grows, and then we see a higher price, right? So, all that being said, now you have the dynamics of the ETFs eating up more Bitcoin that's being produced. And so we saw, an all-time high for Bitcoin prior to the halving last time. And unfortunately, or fortunately, however you want to look at it, the whole market's predicated on Bitcoin's movement at this point. The reason behind that is that a lot of the market's traded by bots. They will take out leveraged long positions on Bitcoin. And when they have losses there because of the leverage, they then liquidate other positions that they're also holding to be able to cover those. And so that's why you see the whole crypto market kind of move down as Bitcoin moves down. And oftentimes the other tokens will have greater losses than Bitcoin because they used leverage on Bitcoin, and they've got to sell more of the other tokens in order to be able to cover those losses. So that's the function that we exist in today. I think that that'll shift as other assets surpass Bitcoin in market cap, and we have utility on some of these networks. They won't track Bitcoin the way that they have in the past. And I think Bitcoin will be around. I think that, just the paradigm that we've currently been participating in will change in the next few years, but we have to continue to endure that until that's the actual case. And so, a lot of people that bought last year that FOMO'd in, that were excited when prices were high. It takes discipline to dollar cost average down and continue to lower your cost basis of your total investment, and continue to have conviction on something when it's bleeding money. You look at my example that I give a lot of people is Michael Burry. He called the housing collapse in 2008 in the GFC, and he created a financial product to bet against the banks. And they laughed him out the door and sold it to him all day long because they thought, that can never happen. And he lost a lot of his investors' money for an extended period of time, over 2 years, that he was paying for those options. And it looked like he was crazy, and it looked like he was going to lose everybody's money. And then he was right. And he ended up making them like 100 times their investment, right? So if you understand something that other people don't, you have conviction in this asset class, this is just part of the cyclical pattern of it. And, if you have conviction, you should probably continue to either hold what you already purchased if you don't have the additional discretionary income to be able to add to your position. Or, if you do have the means, maybe you look at dollar cost averaging down and continue to lower your cost basis so that you have more when it does end up going the direction that you thought it would.
I think that makes absolutely sense. I think it's the best way to be patient and to understand in what you are investing. Thank you very, very much, Jake, for this valuable conversation. I really appreciate it. Thank you.
Yes, ma'am. Yeah. Thank you for having me.
Yeah. Now it's your turn. Share the video, leave a like, write a comment. Thank you so much. Take care and bye-bye.